The month of January started on a good note for the stock market, registering almost double the figures that were recorded in the month of December.
We've turnover going up to about 38 billion shillings from about 19 billion shillings in the previous month, that's December. We had a lot of activity going on for Umeme and Stanbic Bank Uganda. We've seen more investors going in for those stocks due to their liquidity, and also investors are positioning themselves ahead of the release of full year 2015 financial results.
However, despite the overall impressive performance, the last 2 weeks saw a steady decline in activity, which has mainly been attributed to the prevailing political environment.
We are drawing closer to an election, so investors are really watching what's going to happen before the election, how the elections are going to go even after. So we are seeing a sort of standoff from the investors currently. We could see the same going into February. Already activity is slowing down.
This is not all bad news, and experts assert that if you're an investor willing to invest in the stock market, now would be a good time, owing to the reasonable pricing of many of the stocks.
Most of the local counter share prices are on a low footing, so it will be advisable for an investor to come in at this time. Yes, we also have seen some investors shifting over to the government securities side, with yields soaring at 25% for the 1 year. So that's also a very attractive footing.
Last week, Umeme and SBU maintained market dominance to register the highest turnovers. Umeme shares traded at 600 shillings each, while Stanbic sold for 32 shillings, price positions they have maintained up to today. Ingrid Nantege, NTV Business.